How's it going, everyone? This video is going to be about timeframe alignment. We're going to talk about how to align the timeframes together, specifically how to go from a higher timeframe point of interest to a lower timeframe entry using the entry sequence. Now, the first thing we have to understand is how I use top-down analysis. With top-down analysis, I am focused on 3 timeframes: a higher timeframe for bias, a middle timeframe for structure, and a lower timeframe for entry. Now, with the structure of this video, I'm just going to be focused on the structure and entry and how to align those with a bias. If you have questions regarding bias, please leave them in the comment section below, or check out the other videos regarding daily bias on my YouTube channel. So in this scenario, we have formed a swing point and I'm anticipating price to continue lower the next day. So with that bias, I would then go down to my structure and my entry timeframe. Now, what do I look for on my structural timeframe? Well, I want to be looking for 1, this to align with my higher timeframe bias. So if my bias is bearish, I want to wait for either a change in the state of delivery or a market structure shift to allow for my structural timeframe to be bearish, which aligns with my bias. Now, once this is bearish, then I want to wait for a key level. And what do I mean for a key level? Well, that is either going to be a fair value gap, a high or a low, or an order block. So you can see here price retraces into a fair value gap, retesting the change in the state of delivery. So now that my structural timeframe is aligned bearish and I have reached into a point of interest, all I need to do is wait for my lower timeframe entry to align with my higher timeframe bias and structure. Now, after I have an order block formation on the lower timeframe in which price moves from bullish and then now it is bearish, now all 3 of my timeframes from my lower timeframe to my structural timeframe to my bias are all aligned bearish, and that is when expansion occurs. So what timeframes do I pair together? I pair the weekly with the 4-hour, the daily with the 1-hour, the 4-hour with the 15, the 1-hour with the 5, the 30-minute with the 3-minute, and the 15-minute with the 1-minute. Now I align my bias the same way as I would align my structure. So let's say I want to take an entry on the 5-minute. That aligns with the 1-hour. So now I have my entry time frame and my structural time frame. But where do I get bias? Well, I want to see what aligns with the hourly. So finding the hourly, I align it with the daily to get bias. So let's say I want to take an entry on the 1-minute. That aligns with the 15. The 15-minute aligns with what? The 4-hour time frame. So I'd use the 4-hour for bias, the 15-minute with structure, and the 1-minute for entry. So what does an example of this look like? Well, you can see here we retrace into a swing low, which is a key level and a point of interest on our structure time frame. So then using the time frame alignment, I would look for an entry on the entry time frame using my entry sequence. So for example, if this is a daily chart, what would this be? An hourly chart, because the daily aligns with the hour. So let's hop into TradingView for some examples. So here we are with our first example of time frame alignment. If you are wondering what time frame I'm on or the asset I am on, it will be in the bottom right hand corner here. So you can see, similar to the example previous, we have retch into an old high. So if I'm anticipating price to reverse off this old high or get a retracement, entering a new phase of price delivery, I would then want to go to its lower time frame pairing and wait for a reversal. So using the weekly time frame, I would then go down to the 4-hour time frame. Down here on the 4-hour time frame, I'd want to wait for a shift in trend, which I use a change in the state of delivery, which is the series of up close candles into that important level. And you can see we have not closed below that yet. So we haven't shifted the structure from bullish to bearish. Here you can see we are entering a consolidation. And now we sweep out these highs to our left. So with sweeping out our highs to our left here, we have made a new high, which then, using the series of up close candles into an important level, this is now my shift in structure or my change in the state of delivery. Now with this, I could look to trade the reversal if I want, now that the timeframes are aligned, or I could wait for another continuation entry. So you can see here, we get a retracement back into the range. And once again, now we have a new order block formation. So with our timeframes bearish, I then could either look to take an entry here or go to a lower timeframes to seek an entry there as well. So what would that look like? We can drop down to the 15-minute time frame here because that aligns with the 4-hour time frame. So now down here on the 15-minute time frame, we have our 4-hour order block level. And so when price reaches into that, we want to align our 15-minute time frame with our 4-hour time frame. So waiting for a change in the state of delivery here. Let's see if we can get it and then get on side with this move. You can see we cannot close below it. So letting this continue, we now make a new high. With making a new high, we now have a new series of up-close candles. And now you can see we get this closure below. So now I could anticipate, since this price action here is now bearish, I'm expecting this high to hold, I could get on side with this move here. Now I can look to target 2R on my entry time frame. And there you see we have hit 2R. So just to review what happened here, if we go back out to our 4-hour time frame, we used a bias or a point of interest from the weekly time frame to wait for a 4-hour reversal. Once this 4-hour is in bearish structure, I then can look for entries on the 4-hour chart to go lower, or I can also use that to then drop down to a lower time frame pairing to look for entries that align. So in this scenario, we aligned the 15-minute bearish with the 4-hour bearish and then the weekly bearish as well. So dropping back out to the weekly time frame, you can also see we put in a swing point there, so we were trading an expansion candle short. So going back to the 4-hour time frame, let's say I don't want to go to the lower time frame and get caught up. What would that look like? That would look like taking an entry on the 4-hour time frame and using a 4-hour chart for my invalidation as well. There you can see we would have hit 2R, or if we wait for a swing low to get taken out, let's see what this looks like. And you can see we hit our take profit there as well. The main point I'm trying to get across here is if I'm entering on the 15-minute chart, I also want my 4-hour chart bearish, and I also want my weekly chart bearish. The whole goal of catching expansions is to have all of my timeframes aligned in one direction, and that is when you get this aggressive expansion move. So let's hop into a few more examples. So here we are with our next example, and you can see we are on the gold daily chart. Do we have a point of interest or a reason to be looking for a setup? And here we have 3 days of expansion into an old high. So looking for a new phase of price delivery, if we're going to form a reversal, that would occur off previous day high. So let's drop down to the hourly chart, since that is what aligns with the daily chart. So here we are on the hourly time frame, and if we are looking for a reversal off previous day high, we want to wait for that to get swept out. Here you can see we sweep out our previous day high. So looking at this series of up-close candles into that point of interest, I am then looking for that as my change in the state of delivery. So now aligned with my daily point of interest of an old high and the context of price trading back towards the weekly open, we now have aligned our hourly with our daily time frame. Now with this, I could look to take an entry here, or once again, I could wait for the New York session or a lower time frame point of interest to be hit. So you can see we reach back into this little fair value gap and retest our change in the state of delivery. So now what would I want to see here? Well, I'd want to see either a lower time frame setup or a new opposing candle or order block formation. So you can see we don't close below there, but now we close below here. So what is this? This is now a propulsion block because it is an order block formed off of another order block. So I could either look to take an entry here or drop down to the 5-minute. So down here on the 5-minute, you can see where price retested our hourly order block here. And we have then closed below the up close candles into that point of interest. So now the 5-minute is aligned bearish, the hourly is aligned bearish, and that also aligns with our bias. So with all directions pointing down, it is then set up for expansion. So looking to get on side at the open of the new candle, you can see here we start to get a little bit of consolidation, but then we eventually expand lower, hitting our 2R take profit. So just to review, going back out to our hourly time frame, we have a reason to be looking for a short setup from the bias of expanding away from the weekly open into a point of interest, 3 days of expansion. But most importantly, I'm not going to look for entries until my lower time frame or my structure time frame shifts in that direction. And then I'm looking to align my lower time frame with that higher time frame structure. So in this case, using a 5-minute entry, I want to have a 5-minute bearish setup that aligns with the hourly bearish structure. And you can see that is when you get expansion conditions. So here we are with our next example, and we are on the Dow 30-minute chart. Now we don't sweep out this low, but we do have an SMT. So using the daily profile, we have all these failure swings on the highs. We're in the New York session, we have an SMT. This is looking like a New York reversal setup. Now with an SMT, I can use this as my lower time frame confirmation. And once we get a closure over that, that is then telling me that this low should hold. Now with that being held, I want to wait for a point of interest to be hit on the 30-minute chart before dropping down to my aligned 3-minute chart. And you can see here we have formed a bullish fair value gap. So if price reaches into this on the 3-minute chart, I then want to wait for the 3-minute chart to align with the 30-minute chart. Let's drop down to the 3-minute time frame. So here we have that 30-minute fair value gap, and you can see as we let this play out here, this is bearish price action here. Now when we reach into the 30-minute fair value gap, I want to wait for this to align with my higher time frame, which is the 30-minute chart bullish. Once we get the closure through the down close candles into the point of interest, also sweeping out the lower time frame lows here, I can then anticipate this low to hold as we have aligned our time frames and set it up for expansion. So getting on side here, my stop on the low, and then looking for 2R. Let's see how this plays out. You can see we get tagged in and we continue to 2R. So the main thing I want to show here is we let the reversal form on the higher time frame, right? And then we have a 30-minute chart trending up. So when we align the 3-minute chart with that 30-minute chart in a point of interest, that is when expansion occurs. So let's take a look at our last example here. You can see that Euro USD is trending downwards here. And what do we have? We have price retracing into a fair value gap and sweeping out this high. So viewing this as a consolidation, if we sweep out the high of the consolidation, what should we reach for? The low of the consolidation. And that is because we have accumulation, manipulation, and then I'd anticipate distribution. So using this as my bias, let's go all the way top down from a daily bias to aligning that with the hourly time frame and then aligning the 5-minute with that as well. So here we are down on the hourly chart. We have our bearish bias from the daily chart looking to trade from consolidation highs to consolidation lows. Now, to align our hourly time frame bearish to align with our bias, do we have that confirmation? We do, because into that important level, or sweeping out those highs, we have this series of up close candles and those were closed below. So looking for the lower half or the mean threshold of that change in the state of delivery, I want to see this area respect to continue lower. So as we continue in towards this London session, you can see we start to retrace up into this point of interest. So if we are going to have this area respect price and push it lower, we'd want to wait on the 5-minute time frame to align with our hourly. So we're tracing back into this hourly point of interest from the change in the state of delivery, our fair value gap here, and sweeping out our high to our left here. Let's drop down to the 5-minute time frame because we got this candle closure here, which I could anticipate a reversal. So down here on the 5-minute time frame, we have aligned our daily with our hourly. Now, is our 5-minute time frame aligned? Not yet, because we have not had that 5-minute confirmation that price is bearish yet. So I have to wait for the closure through this series of up close candles into an important level. So now with this closure, I could look to get on side here with a short setup with my stop on the high, or wait for any retests. So with this consolidation, I'm not anticipating price to reverse from a consolidation. Are we respecting 0.5 of this change in the state of delivery? We are, as we have not closed over. So looking for this to become a propulsion block, do we get the closure below this? And there we get the closure below this. So now I would not anticipate price to trade to this high. So I would look to get on side here with my stop over this swing high, looking for 2R. Now, since I'm aligning my daily with the hourly and the 5-minute, what I can do is I can look for this to have my target be hit or get stopped out. But what else can I do? Since I'm aligning these timeframes together, I can also draw targets from my hourly timeframe. So if I'm using my hourly timeframe here, I could then look for runners to go take out this low here, this short-term low, or to go reach for this low down here, or the consolidation low on the daily timeframe. And you can see when you align all the timeframes together, that is when you get expansion. And there we go and take out that low. So I hope you found this video helpful. If you did, please consider liking and subscribing, and I hope you have a great rest of your day. See you guys next time.